that I will explain you about the engulf candle and candlestick patterns. Alright, so this is the bearish engulf pattern. Let me dig more into it. But before that, let's dig into the candlestick patterns. So basically, this is a bullish candle, and the opening price of this candle is the lower portion like this one. So candle start from here and candle is ending or closing at this level. The same like that, there is a high and the low price as well of that candle, which is the high and the low wick of that. So lower wick is known as low level or low price of the candle, and the upper wick known as the high price of this specific candle. Same like that, we have the body as well, which is more important than the other things. So this is the body, so we will call this green thing body of the candle. Okay, so same like the bullish candle, we have the bearish candle as well. But there is minor difference. You can see the open price and the close price of this candle is quite different, or you can say is reverse of the bullish candle. So it starts from the up and then close at the down. So engulfing candle consists on the two parts. One is bullish engulf and the one is bearish engulf. So here are the examples of the bearish and bullish engulf candles. Alright, we will dig more into it. But there are more things. Not all the engulfing patterns are valid, so we have to use only strong engulfing patterns for our strategy. And you know, this is the bearish engulf candle, and there are few rules I have created which you have to use specifically to trade with our strategy. Okay, so this rule is body of the bearish candle fully covers the body of the previous bullish candle. So it's mean the red body covers all the green body area like that. As you can see, the green body falls under the red candle. It's mean that the red candle body is covering all the size of the green candle body. So our rule number one is validated here. Second rule is that the wick of the red candle also covers the green candle completely, including the wicks. So here are the examples. So you can see the body is covering the green candle. You can see the rule number one is validated here. So same like that, we have the rule number two, where the wicks should also cover the body and the wicks of the green candle, and green candle is not going beyond the wicks of the red candle. So rule number two is validated here as well. No problem. I will give you some few more examples so that you can understand it much better. This is the another pattern. The body is covering, and you can see rule number one is validated here, and you can see the wicks are also covering. No, actually, because if you see more carefully, the wick of the green candle is beyond the high level of the red candle. So it's mean the wick is going outside the range, and red candle is not completely covering the green candle. So that's why our rule number two is not validated here. So we will not consider this pattern a valid pattern for our strategy. All right, there are few more examples. So this is another pattern. You can see the wicks is wick is covering, the body is also covering, so it is a valid pattern. Third example, body is covering, wicks are also covering. Yes, it is a valid example. This in this example, the body is not covering by the red. So as you can see, the wicks are covering the green body, but the red body is not covering the green body. As you can see, the green body going beyond the lower limit of the red body. So it's mean it's not a valid pattern, and we will not use this pattern. By the way, this is a right engulf pattern, but not valid for our strategy. We will ignore these types of patterns while we will looking into the market for to find or generate the signals. All right, so I have explained or shown you a few examples. So two of them were valid and two of them were invalid. So you know now better that which pattern is good and which pattern is not valid for our strategy. All right. Okay, same thing goes for the bullish engulf candle as well. The rules are same, you know, but you have to just look on the different colors. Like the now, the green body should cover the red body in case of bullish engulf, and wicks should cover the red candle completely. So in that case, this is a bullish pattern. So rules are same, just the color is the difference and the perspective is different. But there are few exception, like in this case, if you see very carefully this case, the body is covering and the wick is also covering, so it is a valid pattern, but I'll not consider this for my strategy to generate the signal. If you see it carefully, you see the body is too much bigger than the green candle. So it is around 3x bigger than the green candle. So that's why I'll not consider this. I prefer to use only when the size of the red candle is 1.5x maximum or maximum 2x maybe, not more than that. In that case, it's quite a lot. This example is right and this example is also valid because the red body is not that too much big, or in that green case, green body is not that big. So I will not consider this pattern as a valid engulf pattern.